Monopoly by Grit.
Welcome to Monopoly by Grit, episode number 4. We're going to talk about the current Australian market in Australia right now. And today we have our very own Dannelle Daiz. And the reason I brought in Dannelle is an avid learner of property, real estate, property investments. If you go to him, he might have articles and newspapers 10 years from now on. So he's an avid learner and he has so much of knowledge, wealth of knowledge, which can benefit you. Welcome to Monopoly, Dannelle.
Thank you, Naveen. Thank you. Appreciate this and looking forward to this actually.
Coming back to Monopoly, you know why we started Monopoly, right?
Of course.
Have you played Monopoly as a kid?
I have played Monopoly as a kid. We played Monopoly in office.
What are your lessons and what were your moments while you were playing with friends, family?
Okay, so one thing is learning the disparity of properties. There are properties that are cheaper in lower demographies and lower situations. There are properties that are more expensive and with better potential. So knowing that, my initial knowledge of that was in Monopoly. I didn't know anything about what a train station also has a value and things like that. I learned in Monopoly. So as a child, I'm talking of my teens. Monopoly was a regularly played thing in my household. We weren't so obsessed with it, but it was something we did when we had those times of almost lockdown times we're back home. So that was what we played.
All right, let's get into it. We're going to talk about Australian property versus rest of the world. What are your thoughts and findings about if you compare Australian properties versus the rest of the world?
Okay, presently, much of the world is seeing changes in economies, inflation, etc. But one thing that doesn't change in Australia specifically is population growth. No matter where there's a war fought in the world, the refugees or post-war people come over to Australia. No matter where there's disparity in earning, those people with wealth end up coming to Australia. Almost every war fought in the world in the last decade and a half, Australia has seen a good quotient of displaced people, refugees coming over. So my theorem is Australia is geographically safe, where an island continent that's governed by one federal government in the ocean between the Pacific and the Indian. We are biologically safe. We're safe against bio threats. Coming in, everything is quarantined. You can't bring a dog in here. It's quarantined. All those things happen. And also economically safe. Okay. Yeah. So I know for a fact, people's money is quite safe in Australia.
No, that's very interesting. That's very true. And also, if you look at rest of the world, we can compare markets of Asian markets such as Malaysia, Singapore, India. And then if you look at the stats, the rental growth has been from 4 to sometimes 10%. But what I also find is the stability which you find in Australia, I don't think there is in any part of the world. If you look at the Europe, places like Greece, you get about 10% return in terms of rental, but then there's not much appreciation at all. And it's all quite volatile. There are stable markets out there, such as Singapore. It's steady. The returns are less, but it's steady. But then, as you rightly said, the population growth in Australia, these are just fundamentals. So there's only 25 million people in the whole of this huge continent. And for example, next 2 years, they want 400,000 people into the country. So, the fundamentals are so strong. When there's more people coming in, obviously they need housing. So fundamentally, I think property market in Australia is extremely strong compared to the rest of the world. I read up some articles about the US. They're going through a rough patch right now, especially in real estate. In US, the multifamily, which they call it, where you get whole blocks of apartments, you can buy whole blocks of apartments where you get whole... that concept is a pretty good concept, which we don't have in Australia yet, but it's coming in. It's called build to rent. So I spoke to a couple of developers in the US, and they are planning to move into Australia to do this concept. So that gives a sign that the market in US is not so good right now. and similar to the Europe as well as Middle East. So comparatively, I think we are in a pretty good wicket, and it's the fundamentals are very strong.
Yeah, I certainly agree with that. And with you said the population growth, people will continue coming to Australia. That's no doubt. We don't see an exodus of people going elsewhere, and especially countries with disparity of earning. Post COVID, the need for people to leave those countries that are struggling at the moment is immense, and intellectual capital coming into Australia is also another key factor. We called it the visa application has a skilled migration requirements. That skill, education obtained elsewhere is coming in. And one line I like to say is, you might come here on a boat, you might come here on a spaceship, but you need a place to live. So no matter what happens, housing is the backbone of things. Economies may change, commercial factors may change, but everyone who comes to Australia needs a roof above their heads. So I completely agree with those fundamentals you were talking of.
Yeah. And going back to, if you look at what are the benefits we have in residential properties, one is, as you rightly said, it's roof over your head. That's your own home. There has to be a place to call home. And then we have investment properties. What benefits can you think of in residential properties?
Benefit in the sense, right now, with the population growth, investment properties is key. If you have your own place, it's not difficult to use the equity in that property and obtain a rental property to rent out to other people. And with the immense population growth that's happening right now, 2022 to 24, 200,000 people are coming to Australia on residential visa. These are not just tourists, not visiting Australia, but to live in Australia. So right now, with the changes we are seeing in the economy, the first home buyers, the people who are just getting their foot in the property market might find it a bit difficult. But if you have equity, if you are a landed proprietor, now is the time to act. Use your equity, use your capacity, buy now. It is a buyer's market. It is an investor market right now. And I would advise anyone with any plans of owning properties to use equity in this capitalist economy and obtain property. Another key point I keep telling myself is, 10 years ago, properties were less than half the price. I have 2 little children. I'm thinking of them when they are 20 years from now. When they are looking to buy a house, the property will be 3 or 4 times the price it is right now. So the sooner you get your hands on something and hold on to it, the better it is.
Better it is for yourself as well as for your family. Because as you said, our kids, when the time comes for them to buy properties, you're probably looking at $1.5 million anywhere in Australia. And to afford that, you need a deposit. And the properties the family would have had can benefit as equity and then getting them their deposits which are required.
Absolutely. And you don't want your children to be tenants for the rest of their lives. You want your children to get their foot in their door, live somewhere of their own. They're paying their own mortgage. They're not paying their landlord's mortgage. So, buy and hold, turnover is not what we're looking for. We want people to buy and hold their properties.
Yeah, and that's from an emotional point of view. If you're thinking about the family, we're thinking about our homes. Then if we go into the investment side of things, there's a whole range of benefits too, right? So things like the tax benefits, benefits of using superannuation towards property investment. There's a whole variety of benefits as an investor.
Completely agreed. Sorry, I missed out that. The key factor of investing is, if you want a comfortable retirement, as the population ages in Australia, that's one key factor. The population is aging. The retirement age is from 65 is 67 right now. When you and I come into retirement, it's probably going to be 70 because the population is aging. That's why aged care is such a big business in Australia right now. So if you want a comfortable retirement, there are many avenues you can invest. You can invest in your own capacity. You can invest with your superannuation. You can invest in syndicates with other people in some cases. I have investor customers who are 2 siblings, put their capacity together and they invest in rental properties. So that's a far, it's a long shot. Thinking far ahead, but they're doing it anyway. As siblings, they trust each other. They know each other well enough to do it as siblings, or even as friends for that matter. You can do it if you trust someone well enough. You can do that sort of thing effortlessly.
Yeah, absolutely. And so let's talk about tax benefits. What are the key tax benefits? I mean, whether you like it or not, in Australia, you can't get away from taxes. The more income you earn, more taxes you pay. And investment property is probably the only way, if you're on a pay-YG role, that's the only way where you can get some tax benefits. Let's talk about it a little bit more.
So, of course, capitalism, in my opinion, this is complete capitalism. You make a lot of money, you pay higher taxes. The more money you make, the higher taxes you pay. If you're earning over $165,000 in Australia, at least 45% of your income goes to the ATO.
Yeah.
So how you recover these taxes is primarily through investment properties. When you invest in a property, on your profit and loss on your investment venture, the loss you show the ATO, or the loss you present to the ATO, is forfeited from your taxable income. So your tax money every year, personally I call it a mid-year bonus. Come June, July, my wife and I do our taxes. That's the bonus we use to travel out of town for a while, etc. Is that tax money? Not only, we do other constructive things as well, like repay our home loan, for an instance. So profit and loss. You're making losses on you're showing that you're making losses on your investment, but you're recovering your taxes on that as well. And depreciation is a key factor that allows you to do that. People, the word goes around negative gearing. But the idea of negative gearing is not quite accurate with a lot of people I meet. You negatively gear, but in investment, you negatively gear your investment, but you make it positive cash flow. So you generate positive cash flow through negative gearing. It's not that you're going to be negative and you're going to be giving money out, but through negative gearing, you make it positive cash flow by recovering your tax money.
Yeah, absolutely. And about creating portfolios, because you and I know when we speak to clients, they're not thinking big enough. They think, okay, I might have one investment property, I have my own home, I just want to pay it off, and I'm happy. But what they don't realize is if you think 10 years, 20 years, 30 years from now, that's just not going to be enough. For you to create some sort of freedom for yourself, you need at least 3 investment properties. I mean, we are telling these with facts, right? But people don't just realize that. I think it's about thinking too small. They have the capacity to do it, but the fearmonger stops them. Have you come across that?
Certainly, absolutely. And procrastination. I must do it. Maybe I'll think about it later. Maybe I'll think about it after this month is over, or maybe I'll think about it after this financial year is over. And people just procrastinate and don't get down to doing it. Yes, you don't have to, stretch out an arm and a leg to do that. But when you do create a portfolio of investments, you're making paramount returns. And most importantly, it should not, or how you should strategically do it is, it should not to compromise your lifestyle. Your investment is a self-sustaining venture that does not cause you to compromise your lifestyle too much. I wouldn't say completely doesn't, but you don't want to compromise your lifestyle too much. A portfolio minimizes your risk for one thing. It might be a dynamic portfolio, as in a house and land, or a standalone titled house on its own, a townhouse or an apartment for that matter, or even geographical. You have 2 investment properties in Victoria. Maybe your next venture should be Queensland or elsewhere, or Perth or Adelaide, minimizing your risk. The rule of thumb in investment is do not put all your eggs into one basket. So you diversify your investments, minimizing your risk. But in order to diversify, you've got to make that move and take the step, not procrastinate. That's what I think, procrastination. I meet a lot of people sitting on, hundreds and hundreds of thousands of dollars of equity, oh yeah, I thought about investing 5 years ago, but just never got down to it. I thought of investing,
Yeah.
blah blah. My wife was some circumstantial change, and they've not done it. And when I meet them, I'm like, oh my god, you should have bought something 5 years ago. It would be almost double the price, double its value by now.
Very true. Very true. And let's talk about superannuation a little bit. So that's another area a lot of people neglect on. Also, I find that they are scared to think about the future. You might be 35, you might be 40. You don't want to think about the 50s, 60s, and 70s. But whether we like it or not, all of us are going to hit 50s, 60s, 70s, 80s if we live that long. But it's going to come. So we just have to think about it at some point. And neglecting the superannuation is another big mistake people do, where they are earning good money, they're having a good balance in superannuation. They're just letting it roll and they're just too scared to have a self-managed super fund and do a proper investment where they can double or triple their investment. Have you come across that too?
Certainly. Self-managed super fund investment in property is purely leveraging, or it's the only way you can leverage your superannuation. You can create a self-managed super fund and invest in its value. You have $300,000 there, you can invest that as your capital investment. However, the only avenue you can borrow on your self-managed super fund is for property. So hypothetically, you have $300,000 superannuation, you invest $200,000 of the $300,000 in a property. You can leverage yet another $400,000, making your $300,000 property, $200 as a deposit, $600 there, and another $100, which means a $700,000 investment. So your investment value, your capital, your returns is on $700,000, not $300,000, because you have leveraged your superannuation in property. And at the end of the day, superannuation is for our retirement. And right now, as much as earning $100,000, earning $200,000 a year on our investment looks big, with inflation, say I'm probably 20 years away from retirement, 25 years away from retirement. In 25 years, what looks big to me right now is not going to be big at all. I have some adverts I came across by big superannuation companies that were in the 90s claiming that the superannuation investor makes $3,000 a month on his superannuation. In today's day and age, what can you do with $300,000? That's how it is. It's a future value of your money that matters.
Very true. Let's talk about the critical success factors of residential properties. But if you go back to the game of Monopoly, we know that location really matters. If you have some properties in Park Lane, Mayfair, or Oxford Street in the green or the purple arena, you know that you're going to make money because that's expensive and that's a good location, right? Similarly, yes, location is number one, but then there are so many other factors which we look at for our investors. But let's talk about it. One is, the most common is rental yield and the capital growth for the past 10 years. It's not what's in today, but what has happened last 10 years and what's going to happen in the next 5 to 10 years. Anything else you can think of?
See, personally, I think there are many indicators to tell us how properties will perform. Going into a mature area that the market is mature and established might not be the best thing for the future of your money. It's a lot of investment to see growth. Proportionately, if you plant your seed in fertile soil with the potential to grow and bear fruits faster, is what would be an efficient investment. So we look at many indicators from as least as the proportion of own occupiers in that suburb to against tenants in the suburb. The affluence of the population, as much as the per capita income per week, as how many cars are parked in the house per week, as much as the demographies of whether they're professionals, whether they're non-professionals, etc., their education levels, their occupation, and their incomes that tell us or give us a trajectory of what the property price growth will be there. It's about managing cash flow and sustaining your investment And most importantly, the biggest benefit is capital growth. So you don't want to go to an expensive area that's growing, 5% on average for the next 10 years, when you can go to a much cheaper area and probably 2 or 3 investments in that same value that's growing, exponentially more. So it's all about knowing where to plant your seed.
Exactly. And as you said, as an investor, number one, I should be able to rent it out. So we need to check that out. I should be able to resell it and exit when I want to. So, and for that to happen, the location has to be right. As you said, we need to check how many own occupiers are there versus renters, so that you can get an indication of how soon you can rent this out. And also what sort of demographics are living there, so that you know who your tenants will be before you get onto the investment. And little things like how many professionals, what sort of percentage of professionals, what sort of blue collar workers, that'll give you a good indication before you get in. So if you look at these critical success factors, which we go through about 35 checkpoints, that'll give you a really good understanding and confidence to go into that investment wherever it is. There are some suburbs, we have 15,000 suburbs all across Australia. So without such due diligence, you simply cannot pick one. And that's what we do for our investors. Other thing is auction clearance rate, so that you get an understanding how soon I can exit. How many days on market? These are real good indicators for people to know, okay, if I put it to market, I can probably sell it in 2 months, 3 months, and it might take 6 months. And it's really good to know for investors to know all these factors before they get into something.
Yeah, and citing the fact of how we obtain this information, anything obtained free, it has no such value. Like Milton Friedman said, there's no such thing as a free lunch. We subscribe to access this information from professional research organizations. And I personally think it's not about what he says or she says. The numbers do all the talking. So those numbers are what are reflective in your investment. And your investment is not, I like the park there, I like the shopping center there. No, it's none of that. It is nothing but the numbers that works on investment. And it's not an emotional factor. It is a logical factor, the future of your money that matters when you're investing.
People do lie, numbers don't lie.
Certainly. And of course, the source you're getting the numbers is most important. Yeah. We pay to be on those, to have access to all this information we go through. So that is key.
And let's talk about the market outlook for 2024. That's a lot of people want to know what's going to happen in terms of the rental market, capital appreciation, and then population growth. So rental market right now is crazy, right? In our own property management, we rent out properties pretty much everywhere very, very quickly.
In a day or two. After.
So in the city especially, it's crazy. And Sydney is worse. Brisbane, Perth, people are queuing up. What are your thoughts for coming into 2020, late in 2023, 2024?
Okay, it is now public knowledge. The population entity that monitors population growth in Australia, I forget the name of the entity, has specifically published that the population growth is rampant right now. I think a key reason for this, like I mentioned earlier, was post-COVID in developing nations. In many developing nations, there's an exodus of people immigrating to Australia and other developed nations, so to say. So that is key. And personally, right now the market is correcting, yes, with economic factors, but it is an investor market. It is a buyer's market. It's not a seller's market like it was less than a year ago, but it is an investor market. So, and most importantly, if we are local to Australia, we might not buy, because we think of an interest rate of 6% or 7% even as a high interest rate, or even at 5% a high interest rate. But in many other countries, customers that I interact with, people that invest through us, think 7% is half of what the interest they are paying in their own country. So they're like, oh my God, it's only 7%. As a foreign investor, I'm talking of 7% because foreign investors pay a fraction higher than a local would pay. So even if we as locals to Australia are not investing and not buying, foreigners are buying in Australia. And I'd hate to see the day, like I mentioned before, I'd hate to see the day that my children are living in a house that is owned by someone who has never even visited Australia, which I see day in and day out. So that is what I personally think. If we procrastinate, we get on our back foot. We don't want to invest and hold property. Overseas people from other countries are certainly doing that. We know that now.
Of course. And I mean, if you look at the rental market for 2024, it's going to get much, much stronger. And the population is creeping in. At the same time, we see developers going into, I mean, typically Australian developers, they just build and sell. Whereas now they're moving into more of build to rent model where they build the whole thing and rent it out. And that's what we need for the rental crisis, which we are going through right now. So I think these sort of indicators tell us the rental market is going to get tighter and tighter, which is fantastic for investors going into 2024. And in terms of capital appreciation, the interest rates will hold off towards middle of this year, towards end of this year, and then probably dip down, as the economists say, probably 2024, and that'll turn around the market, which we have seen already. If you look at Melbourne and Sydney especially, it has already turned since the interest rate started rising. It has gone down. Now it has been quite stagnant. There has been a correction of about 5%, but now we see it's going up. And that will continue into 2024, which that's inevitable with the population growth coming in. And as we discussed before, population growth, we are looking at 400,000 people and close to 1 million in the next 10 years. So that's astounding, because we need to make sure our infrastructure is in place. We need to make sure we have housing in place for rental as well as for people to buy.
Yeah, that is certainly true, because the population growth is immense right now. And an article I was reading, I forget the publication it was on, but it indicated how people will be living in their cars on the yards of their relatives, in trailers, in caravans, and extended families. Extended families, the siblings, their children, the grandparents, everyone living in the same house. Each family probably sharing a room. A very interesting article about how the population growth will impact the housing market and the density of living. So, as I always say, the economies may change, raw material prices may change, but one thing that does not change is population growth and the requirement for houses.
Absolutely. Let's do a statewide review about where things are heading. Let's start with Melbourne to Sydney to Perth, Adelaide, Brisbane, the capital cities. Let's start with Melbourne. So right now, Melbourne house prices are quite stagnant. Rental market is strong, and it will continue to be strong. But the population growth is going to be crazy in the next few years, especially in the apartment market. People are queuing up for apartments. Rents have gone up like $100 to sometimes $200 a week. And it's a heaven for investors. And on the other side, all the land developments are going really well. And the infrastructure developments, the major projects like the airport link that's coming up, the tunnel project, I think the outlook is fantastic. What are your thoughts?
Definitely. The outlook is certainly fantastic. And more, and what happens is, how do I say it? All of this is happening with a future in mind. These are all planned ventures. These are not just ad hoc ventures that are taking place, but the developments, the tunnels, all of these are happening because of population growth. Population growth, everything is growing. And one particular point I'd like to emphasize is, we talk about hyperinflation right now throughout the world. Has there been any time that once we get to inflation, that it goes backwards? Like say 15, 17 years ago, petrol, I measure it by the price of required commodities like petrol. So 15 years ago, petrol was 99 cents per liter, 96 cents per liter, maybe $1, 2 cents per liter. Through COVID, it almost went back there to around $1 a liter through COVID. But right now, if I see petrol less than 165, I'm rushing and pumping, topping up my tank. So like that, construction prices are going up. Everything is getting more expensive, and there is no way that the disparity in earning and property prices gets closer to each other. It only gets wider.
Yeah.
Inflation is property price growth will inevitably surpass inflation.
Yeah. And let's talk about Sydney now. Sydney again, it had a hit with the interest rates coming down, which is obvious because Sydney had a pretty good run, like 15-20% growth during COVID last 2 years. But now it has turned, and auction clearance rates are on the rise, and there's so many projects coming along. The new airport is a big project over there. So I think Sydney will also turn around in the next couple of years. Any thoughts on Sydney?
Certainly, Sydney will turn around. Of course, as of very recently, Melbourne overtook the population of Sydney. But Sydney will turn around. They say that the Sydney prices in housing jumped with the year 2000 Olympics. In the year 2000, the Olympics happened in Sydney. So the gap between Melbourne and Sydney became so wide as of the Olympics in the year 2000. So that gap is still there. It's not changed all too much, but Melbourne is slowly and steadily catching up. But Sydney also, I personally think, hit rock bottom and is going up now. Most importantly, again, I emphasize, because of the requirement of housing. People need to live now. Places like this Austral Airport in Sydney, Liverpool, Austral, Denham Court, etc. I have seen prices from 7-8 years ago where you could get a 400 square meter block for something like $700,000 or $800,000. Now a new off the plan 448 square meter block is $1.1 million in those same areas.
Yeah.
So it's never going to go back to the $800,000-$900,000 prices I saw a few years ago. So inevitably, these prices are all on uprise. So we hit rock bottom and now we're on the way up.
And that's where majority of the equity lies in for all investors who are in Sydney, which is fantastic.
Absolutely.
Talking about Olympics, let's go to Brisbane. Brisbane, the moment it was announced, the 2032 Olympics, there's so much of influx of capital came into property. And we saw a tremendous growth last 2 years. I mean, Brisbane used to be cheap and people used to buy 450, 500,000, but without 650, you cannot do anything right now in Brisbane. And I think it will continue to be the same. The rental demand is so high and there's so many projects going along because of Olympics, the Olympic villages, Sunshine Coast to Gold Coast to Brisbane. Any thoughts on Brisbane?
Certainly. Brisbane I have been part of transactions in Brisbane that saw dual key properties, dual key properties that have a, high rental yield on it. We transacted for $290 and $300, between $290 and $350,000. Those very same properties right now, the same properties that I was a part of the transaction, when I do a valuation now, is like $750,000 without, I'm talking of 5, 6, 7 years ago.
Yeah.
And honestly, my opinion is Greater Brisbane prices are not too different from even Melbourne right now. They've seen exponential growth between the announcement of the Olympics and now. And also, the least affected by the correction in the market, I would think, is Brisbane because of the Olympics coming about. And once it takes those steps forward, it doesn't go backwards. Anyone who buys a property, hypothetically, for $600,000, 4 or 5 years later, they're not going to sell it for less than that price. They might give you a slight discount on what they're asking for, but they're not going to sell it for the $400,000 or $500,000 they paid for so many years ago. So Brisbane, not just Brisbane, Queensland on the whole is seeing some exceptional stability in the market, I would think, in these trying times of inflation, etc. So I think the least affected by the correction in the market in the past that has now hit rock bottom is Brisbane.
Let's go to Adelaide. Adelaide, I thought, was a neglected market if you look at the last 5 years or so. Nobody talked about Adelaide in terms of property, but everyone talked about Adelaide for wines and the beauty Adelaide has to offer and the beaches and so forth. But it's a totally different ball game altogether. Everyone is investing in Adelaide, Perth right now because of the price point, because of the infrastructure projects going on. Rental yield is extremely good. You're looking at 5%, especially compared to the price you pay. It's a fantastic investment, and the migration towards Adelaide, because it's not easy to come to Melbourne or Sydney right now, or even Brisbane for that matter. So people are moving into Adelaide, Perth. Migration inflow is extremely high. The outlook for Adelaide is pretty good.
Absolutely, I completely agree. And the key factor about Adelaide is you're paying far less, or you're investing far less than you would be investing in New South Wales, in Victoria, or in Queensland. But the rental yield is a fair bit higher. The proportion of tenants in Adelaide also is a fair bit higher than the other states I mentioned. So investing in Adelaide is right now, if you're sitting on equity in Victoria, in Melbourne, and your capacity, using your equity without a cent out of your pocket, purely using your equity, your capacity is $500,000 or $600,000. You wouldn't be able to make an optimally efficient investment in Victoria, or for that matter, even in Queensland right now with the prices rising. However, in Adelaide and even Perth, you can still get a very efficient investment, ticking all the boxes required to be a good investment in Adelaide and Perth. That gives you a rental yield as much as a $700,000 or $800,000 property in Victoria. It will give you as much yield in a $500,000 or $550,000 investment in Perth or Adelaide. So that is something, impact, something quite impressive for me. The fact that Adelaide and Perth are performing so good in the rental yield factor.
Definitely. Let's go to Perth, the western coast. I mean, I know it's a 4.5 hour journey to Perth, but a lot of, just for that fact, people try to neglect Perth altogether. But it's definitely not a place to neglect right now, because yes, Perth was down in terms of property for the last, I would say, 6-7 years. But right now is the time to get into Perth. It's booming right now. The rental market is probably the best in Perth. And there's so many projects. I mean, when I was there last time, I saw Stockland, Stadley. They're doing huge projects. And I mean, these are nearly $1 billion investments. And that kind of companies are not going to put that kind of money if there's not going to be returns.
So, certainly. So, Perth and Adelaide once again are seeing exceptional growth, and one thing is the mining boom ended in the early, beyond 2010, the mining boom ended, and we saw a bit of a fall in the property market, and everyone lost interest in Perth. But now I can tell you for a fact, I know people immigrants who arrive to Australia sometimes have no choice but to start their life off in Australia, in Perth and places like that. So these intelligent people, or these people, the educated people who come in on these migration visas, most often have the capacity, and they are looking to buy and live. The Australian dream I used to know of we didn't want to rent in Australia. When you come to Australia and you leave the house in your early 20s, one of the first things you do is you buy a house. But that is changing. So these people who come in here come with money, and they end up buying property. So even population growth in Perth, Adelaide, Darwin, everywhere is affected. And of course, the government wants to create a consistency of, capital, consistency of intellectual capital. The doctors, the lawyers, all of that. They're even given subsidies on obtaining properties because of their education, because of their skill. So there are many avenues that the government is facilitating this population, the required population to live in Perth, Adelaide, and even Darwin, to keep the ball rolling, so to say, with everything happening in order, by giving them benefits of moving there. They get a few extra points if they're moving there for their migration process. So things of that sort definitely intrigue, definitely drawing people to move there at least for a number of years. And I personally think I have a friend who moved in there. By the looks of it, he's enjoying it so much that he's not going to come back anywhere else. The lifestyle, all of that there, is really caught up with it.
All right. Starting from the streets of Oxford Street, Park Lane in the Monopoly Board, we moved around the world and around Australia. We have talked about a lot, but it was a great chat. Thank you, Dannelle, for joining me.
Thank you, Naveen. Appreciate the opportunity, and definitely enjoyed sharing the bit I know with other people as well.